financial sector has been very overburdened. And the solution by President Obama was to say, well, there's only one way to get the banks out of the negative equity that they've fallen into, and that's to pursue the zero interest rate policy. And with low interest rates, that made it profitable for banks to lend to real estate, to lend to buyers of stocks and bonds, and that pulled the value of the price of their collateral, backing their real estate mortgages and their corporate loans, to pull not only to pull the United States financial system out of the negative equity that it was in, but to achieve the aims of the Obama administration and the Wall Street interests behind him to greatly provide a bonanza for the financial sector. Since 2008, American wage levels have been absolutely flat. 40% of Americans today don't have any savings at all. All of the growth in wealth has been financialized growth in wealth, real estate, stocks, and bonds. And this is the result of the low interest rate, zero interest rate policy, making it profitable for private capital. All of a sudden, non-bank lenders have, big firms, Blackstone and others, have borrowed from the banks at very low interest, like 1%, and they've bought all sorts of companies to do what required a new word to be introduced into the English language, enshittification, to buy the companies and just sort of bleed them for whatever they could, and to maximize the financial returns by debt leveraging, and to buy them on credit, on so little credit, with 1% or even 2% interest rates, that they could get everything that they could make over this minimal low interest rates. And so you have this enormous financial inverted pyramid built on this bank credit. And the Federal Reserve System, as Treasury Secretary Bessent has noticed, has extended enormous credit to the banks based on collateral that they've put up from all of this. The Federal Reserve will create the credit for banks that will then make the loans to private equity, and then pledge all of their collateral with the Federal Reserve. So it's been a asset price inflation. In the monetarists, Milton Friedman, monetary economists, make this false assumption that creating money is going to increase the price index, meaning consumer prices. That's not what banks lend money for. They lend money for assets, to buy real estate, stocks, and bonds, and the value of a home or an office building or a stock company is however much the bank will lend against it. And the lower the interest rate is, the more money that the larger the loan can be capitalized on the basis of whatever the buyer or owner of this asset can squeeze out of it. So you've had the U.S. economy squeezed in terms of the labor force is squeezed, the real economy, the industrial economy has been squeezed, and to pull out all of these commitments to the financial sector, and this financial asset price inflation has attracted pension fund money and private investment money, all of which is committed to somehow making this financial debt pyramiding work. And the only way that you can make it work is to turn the economy into a Ponzi scheme, where you lend the debtors the money to pay the interest to keep current on their loans so they don't default. Well, now you've just seen the interest rates on 30-year mortgages this week went over 5%. And the 10-year Treasury securities 4.5%. This is all of a sudden there's no zero interest rate anymore. All of a sudden, all of these loans that have to be rolled over from the large banking institutions that have made these loans to the private capital companies find themselves un unable to recover their cost of capital by lending these companies enough money to pay to continue the Ponzi scheme that's underway. That's the whole problem for the economy, and the fact that the war in Iran is it has created irreversible, for the time being, interruptions in the chain of payments that was based on oil and gas and ammonia and fertilizers and sulfur and helium. All of these things, these breaks in the chain of payments are going to lead to defaults. And once there's a default, you have this exponential growth process of debt reversed, and you have exponential shrinkage on the way down. That's what a depression is.
Yeah, no, it's what's hard to predict how it will play out as well, given that there's so many variables and so many actors who will be affected by this. Indeed, it's hard to imagine any country in the world who won't be affected, especially due to the energy alone. But if we look at the other great powers, how do you see them being affected by this war? I mean, we see the energy, well, for example, the energy war, it's not just, with Iran, with the Russian, for example. NATO's tried to cut off or at least limit the reliable access to a lot of key maritime corridors or choke points, as you referred to them earlier on, for Russia. That is, want to limit Russia in the Black Sea, the Baltic Sea, and also in the Arctic. We see the efforts to not just hijack Russian oil tankers, but now they want to seize the oil as well. It's attacks on its refineries. The Chinese are worried about these choke points. They're also worried that the U.S. going after Iran is a way of targeting China's own energy access, and of course India will also be greatly impacted by this. The Americans had just convinced them to reduce their purchases of Russian oil, and now, of course, all of it has to be reversed, and indeed encourage them to buy more Russian oil to keep the markets up. How do you see the, I guess, wider international system adjusting to this? Because the U.S. is trying to sell it very hard that this is Iran's fault, but this is the United States that attacked Iran with Israel, of course.
Well, the international system is not adjusting. Russia has said, well, Europe has stated, the NATO countries have stated they're going to stop buying Russian gas and oil, that actually they've been managing to get some ever since 2022. Europe has already said that I think by May they're going to stop importing Russian oil and gas. And so Russia says, well, why not stop right now? They've already threatened to break all of their long-term contracts that they'd promised. We'll sell our oil and gas to other countries. And obviously, with Hormuz closed, Russia has no problem at all finding other countries to import this. Europe seems to be committing economic suicide by following the sanctions on Russia, and you'd think that it would see the results that have happened to Germany, above all, of cutting off Russian gas and oil. The whole of Europe is going to end up looking like Germany looked like after 2022, and its GDP's been going down, and probably will continue to. It seems not only dead set on not importing Russian oil and gas, but Ukraine has cut off the pipeline supply to Hungary, and I think Czechia also. And this is a non-NATO country. Ukraine has virtually declared war on Hungary, and NATO is supporting the attacker, the foreign attacker of a NATO country. I don't see how NATO and the European Union can survive all of this, because the result of this economic crisis is going to force the governments either to violate all of the restrictions on how large can a government deficit be as governments try to pay subsidies to the homeowners and the business to heat their homes or office buildings and have electricity to turn on the lights at the higher gas and oil prices. Something has to give. And so far, what you're having is Merz in Germany saying we have to cut back living standards. We have to cut back social spending to spend more on military to fight Russia so that Russia cannot invade us again and take over East Germany like it used to. This is crazy. There's still this is the enabling myth of that Europeans have been told that they need American support to protect them against this the fact that elephants are going to somehow invade, or flying saucers will invade anybody. They can make any kind of an enemy that the Russians actually have any interest in invading when invading Europe. Or obviously Russia has turned its attention towards Asia, and so have most countries. You'll notice a change in the vocabulary of the newspapers and television and media over the last year. I think 30 years ago, when I was writing archaeology books, we called Mesopotamia, Iraq, Iran, the Near East. Well, then it changed to the better term, well, Middle East. But in the middle of what? In the middle of Europe and Asia. Well, now the word that is used in polite company is West Asia. It's not the Near East. It's it's recognized that this is now and henceforth part of Asia. And the whole world's growth area is going to be part of Asia, leaving Europe and the United States, leaving the West behind. So it's a polite way of saying Asia is the East, no longer the West. And that is the division you're having in the world. America's allies in Europe and the Western Hemisphere, plus Japan, Korea, and Philippines in Far East Asia, that's part of a whole different economic bloc. And what we're seeing is something that I think for years the Americans call, well, it's a clash of civilization.